what I saw was you like that 100K example, you put it in the S&P and it'll make like 8, 9, 10% a year based on historical data.
Hmm.
But you take that 100 grand and you put it on a maybe a down payment on a house that's worth maybe 4 or 500,000 over the course of 10 years, that house is probably gonna like probably double in value. And so that's you're gonna have probably 6, 700K in equity. There's some debt pay down along the way. Um, call it 600K in equity. But that S&P 500, that 100K, it may be doubled. So
Yeah.
instead of 100 grand, you have 200 grand.
Right.
So there's like this massive gap. And then the most common like rebuttal I hear against real estate is like, I don't want to manage tenants. So it's like, well, you don't have to. Just hire a good property manager.
Yeah.
And
Yeah.
so once I started seeing all that, I was like, I'm not touching the stock market ever again. And
Right.
I had gone deep into it. Like I had futures, futures, options, all the derivatives, the bond market. Like I dissected all of it as much as I could.
Yeah.
And yeah,
Man, that's yeah, there's nothing like the leverage that you can get in real estate where you can come in with a much lower down payment. Like you said, you're putting all of your money in, whatever you're putting, that 100,000, it all goes into the stock market and you get $100,000 worth of stocks. But in real estate, that $100,000 gets you a $600,000 house, like you said, and or a $500,000 house. And that leverage, I mean, is just huge. I don't think
mhm.
there's any other place you can find leverage like that other than real estate. But it sounds like you had this great kind of analytic sense of things of how to look at, if you're analyzing the market and you're diving into all of that, you're able to analyze kind of trends and things that are coming up. And it sounds like that played just right into looking at deals in real estate and figuring out what was and wasn't a good deal.
Yeah. Yeah, and the biggest takeaway was that clicked for me was when I realized, like, technically in my master's in finance, I studied monetary policy.
Hmm.
So like everyone they spend, 8, 10 hours a day working to get a dollar, but most people don't know what a dollar actually is. Like, where does it come from? Who decides how many we have? Like all this stuff. So
Yeah.
I dove into it and I realized, okay, we have inflation. They print money, especially during COVID, 2009, all
Mhm.
the way back to 1929, the Great Depression, and they just print it. It's not
Yeah.
backed by gold anymore. And so the reason I mentioned that is I realized that influenced the stock market, but it really influenced the real estate market. Like when you look at what happened with COVID.
Yeah.
And so I just looked at it as opportunity cost. It's like, all right, I could put all my hard-earned dollars here in the stock market and just work for 30, 40 years. Or I could, like you said, learn how to find a good real estate property and I could park my money there. And yeah, it's like apples and lasagna. It's not even
Yeah.
apples and oranges. It's like two different food groups.
Yeah, absolutely. Monetary policy is fascinating, the way they print money, like you were talking about. And that's something we're hearing a lot of even today of, are we going to just start printing a bunch of money to kind of fix things today? I mean, that's just a constant cycle that we go through. And if your money's sitting in the bank, it's not a dollar today is not going to be the same worth as a dollar a month or 2 months a year from now.